Hello, ladies and gentlemen. I hope you're fine, wherever you are, and I'm very glad that I'm taking you through our feedback exercise for the mock one. Okay, our first mock in the ACCA FA1 paper. All right, as you are preparing for your exams, the school, the Transkyle Consulting Services, have considered it uh, expedient that you guys should undertake a mock test, okay, where you'll be reviewing yourself to see if you are ready. Okay, so this mock test you should uh, be serious with them. When you are taking the test, you should make sure that you are under exam conditions. You shouldn't be able, you shouldn't be attending to other tasks, but you just have to concentrate to put all your effort in the exercises. So this was part of our first mock, and you are left with the second mock. And after that mock, you should be ready to write or to sit for your exam. Okay, so in this feedback exercise, I would uh, pinpoint about 25 questions. Okay, I will take you through about 20 to 25 questions which I found to be harder. Okay, they were a bit harder than the rest. Okay, but I would also consider other questions I might encounter as well. Which might be incidental in the cherry picking exercise. Okay, but remember, we'll only be targeting those questions which we found to be a bit challenge to you guys. All right, but if time permitting, would be doing everything. Okay, if the time permits, we'll do everything. So please, I want you to flow with me, okay, as I will be explaining how we should have uh, determined the correct answer or the computations involved. Because remember, this paper is about recording financial transactions. We should be showing examiners that we are ready. We now understand the basics of financial accounting. This is the basic foundational paper, and on your ACCA journey, you just have to show, to have a solid grounding in financial accounting. All right. So, without wasting much of your time, let us get straight to the business of the day. Okay. Our first question was, where a transaction is entered into the correct ledger accounts, but the wrong amount is used, the error is known as an error of, this is an error of commission. Okay, let's go to the second. Remember, the here I'll be showing you the correct answers, but I would also explain where there is need for explanation. Okay, but for errors, all right, we know that the error of omission is about we did not do anything. Okay, we didn't do anything as far as recording of the transaction is concerned. We just omitted to record this transaction at all. All right, so in that case, that's an error of omission. All right, and then error of commission. This one has something to do with wrongly, endorsing figures. All right, but in the correct account. All right, the account will be fine. All right, but we are just wrongly appending figures. All right, in that correct account, but the figures were incorrectly used. All right, we used the wrong amount. That's an error of commission. Now, when you are talking of the error of transposition, we are simply saying that the error occurred as we changed the position of figures, okay, in an amount. All right, we just transpose. For example, the figure was supposed to be 1245. Okay, 1245, but we ended up putting 1254. We had transposed the 4 and 5. We have transposed them. Okay, that's transposition. Then the error of principle. Here we are using incorrect account. Okay, we are using an incorrect account. That's the issue of principle. We are using the wrong double entry bookkeeping. All right, in terms of the account which we are using here, we are doing it in an incorrect way. Okay, so we are violating the principle of accounting. Okay, so it has got to do with wrongly placing placing transactions in accounts which do not, which shouldn't be used. Okay, that's the error of principle. All right, let's move. Our second question. All right. The second question is saying, when a trial balance was prepared, 2 ledger accounts were omitted. All right. 2 ledger accounts were omitted, and these accounts were discount received worth $6,150 and discounts allowed worth $7,500. To make the trial balance, a suspense account was opened. What was the balance on the suspense account? Here, ladies and gentlemen, let me just try to illustrate this point with some noting. Okay. All right. We are being told that the discounts allowed and discounts received were both omitted. All right. But in suspense account, all right, suspense account, all right, we know that when a trial balance does not balance, we use a suspense account. All right, this is a temporary account which will enable the accountant to investigate where the error could have emanated from. All right, so the tip I always give to my students is that a suspense account is only going to be put to that side of the trial balance where there is a deficit. Okay, so put a suspense account on the side with the deficit. Deficit is no Y. Okay, so where there is a deficit, what do we mean? All right, let us say this is our trial balance. Okay, this is the debit, this is the credit. All right, now we are told that the discount received was omitted. Okay, let us start with the discount received worth $6,150. This was omitted. We know that discount received is income, and income has got a credit balance. So it means that the credit side, this one, had a shortfall of 6,150 because there was no entry there. So there was a shortfall of 6,150. And then we are told discounts allowed. The discounts allowed were 7,150. And discounts allowed are an expense because we would have allowed customers to buy our goods at a reduced price. We had given them some discount. So we had allowed a discount on our customers. So it means this was an expense, and an expense has got a debit balance. So the debit side was omitted also. So it had a shortfall of 7,000. let me check the figure. 7,500. Okay, this is again a shortfall. Now the examiner is testing us if we understand this general principle that the suspense account is put the suspense account is put on that side of the trial balance where there is a deficit. Okay, so here we've realized that okay, both sides have got a deficit, but we have to determine which side will remain having a deficit after we set off everything. So here we've got a 6,150, and here we've got a shortfall of 7,500. So automatically we have to set off these figures, and you realize that the debit side will be the one with a remaining deficit. So that's 7.5 minus 6,150. Okay, let me use my calculator. 7,500 minus 6,150, that's 1,350. So obviously we are going to have a suspense account on the debit side of the trial balance. So we are going to have a suspense account debit of 1,350. That's how you have to attack these suspense account questions. They mustn't confuse you. Alright? So let us check our answer to see if we are fine. Good. You can see that's a debit 1,350. Let's move on. Let me just try to locate another question here. That one, let us ignore it. It's a bit simple. Good. Let's talk of this. Question number 4. Okay. A company uses the following hierarchical system. So this one is to do with coding of transactions. We have got 1 for expenses, 2 income, 3 assets, 4 liabilities. We are also told that 1 is equal to non-current assets, 2 current assets. Then we are also told that 1 is equal to cost, 2 accumulated depreciation. Okay, so 1 is equal to property, 2 machinery, 3 office equipment, 4 motor vehicles. Okay, those are the codes we have been given, ladies and gentlemen. All right, and then the question is saying, which of the following correctly codes for the accumulated depreciation on cars? All right, which of the following correctly codes for the accumulated depreciation on cars? All right, note, cars are non-current assets. So we are being hinted here that cars are non-current assets. All right, so whatever our code should be, it should relate to non-current assets. All right, but remember, a hierarchical coding system simply means that every number, okay, in the code has got a meaning. All right, it is some form of a faceted code, but in this code, every number, every digit, or every character of the code means something. All right, so as the code expands, it simply means that something is being referred to. Okay, so let us try to illustrate this point. Hierarchical code. So for example, if a code says 1, 2, 3, 5, 6, here we are being told that a hierarchical coding system takes into account or makes use of every digit that is in the code. So the 2 stands for something, the 3 stands for something, the 5 stands for something, the 6 for something. All right. So in this question, okay, in this question, we are being told, let us code the accumulated depreciation of a car, of a motor vehicle. All right. So we know that a motor vehicle is a non-current asset. All right. So we have to go in. We have to start from the beginning. Okay, from the left side to the right. Okay. So every figure from the left to the right means something. So our first figure should tell us about an asset. Okay, because remember, accumulated depreciation of a motor vehicle, that's a transaction that is related to an asset. So the first digit of the code should speak of assets. So we go to the information given in the scenario and locate assets. Okay, so if we go to the scenario, you can see that the assets is it possible here? All right, let me try something. Okay, so the code here should actually be, should start with the asset. So 3 should be our first figure of this particular code. Okay, so we come here and we have to endorse. All right, so we can simply start to write here. So 3 should be our first figure. All right, our first figure to the code. And then we know that this accumulated depreciation is for a motor vehicle, and we are told that a motor vehicle is a non-current asset. So this we come here to the second. Remember, all this information was for the first digit. Okay, and this information is for the second digit. Remember, we are told that this is a hierarchical, so that's it expands that way. So the second digit that is to come is for the non-current asset, which is a 1. All right, we then go to the third digit here, accumulated depreciation. We know that the accumulated depreciation is this one, so it's given by a 2. All right, and then lastly, for which property? For a car, a motor vehicle. So that's the motor vehicle is given. Sorry, what's happened? Okay, so this is the motor vehicle. Okay, so as you can see, not understanding what is going on. Good. Oh man. Okay, so we should have a 4 there. So we are having a 4. So this is our code, ladies and gentlemen. Let us try to see from the answers to see what is going on. All right. So that's 3, 2, and 4. All right. That's 3, 1, 2, 4. Okay. My computer is checking. All right. So 3, 1, 2, 4. So you can see that the answer is 3, 1, 2, 4. Okay, that's the answer there. As you can see by the green arrow, the green tick. The green tick shows that that's the correct answer. Okay, I'm happy. I'm sure you have understood. If you haven't, please replay that portion of the video so that we flow together. Okay, there is also this code again, the question on code, but this one is a block code. All right. A block code is a code. Okay, it is a code that only shows interest in the first digit of the code. Okay, or the first character of the code. So the first digit is where the interest is. So it loses interest as it expands to the right. Okay, as the code expands, it loses interest. All right. So for you to determine if the code is for assets, is for expenses, for liabilities, you then have to know from the question. All right. You can see that one from the hints of the question. As you can see here, we are given the first code there, 1. It starts with a 1 and then other figures to the right. So you can see that here the examiner is saying any code that starts with a 1 represents a transaction for expenses, is an expense transaction. Any code that starts with a 2 is an income transaction. Any code that starts with a 3, it is an asset transaction. So 3 is for assets. Any code that starts with a 4 is for liabilities. So the question is saying, which of the following accounts should not appear in the statement of financial position? Okay, so we know in the statement of financial position, we do not want to see expenses there. We do not want to see income there. All right. So anything that has got any of those, income or expenses, should not be found in the statement of financial position, because in the statement of financial position we only see assets, capital, and liabilities. Are we together? So that's how the examiner is going to trick you. He knows that you know all those things, but because it is in a coding situation, you are likely to be found wanting. Okay, so which of these codes shows, which of the following codes here is not, should not appear in the statement of financial position? Okay, let's attack one by one. The first code here starts with a 4. All right, a 4. If we go to the scenario, if we go back to the scenario, a 4 represents liabilities. So liabilities are found in the statement of financial position. So the first one there is wrong. Okay, because the question wants us to pick those ones which do not appear in the statement of financial position. So by that fact, the first code is wrong. Okay, it's a wrong answer. Then the second code, 3214, we say that a block code only has got interest in the first digit. So 3 is for assets. As you can see there, 3 in a code that starts with a 3 is for assets. So a 3 is found, is a transaction that is found in the statement of financial position. So that one, once again, is a wrong answer. For the purpose of our discussion, it is a wrong answer. Okay, then let's look for something there, something else. So automatically the last code here, the last one, the fourth one, as you can see, the one at the bottom is for assets again, because it starts with 3. So that one can be found in the statement of financial position. So therefore it is a wrong answer. So we are left with this code that starts with a 2. Okay, and this one should be our answer, because it must be for something that is not found. Yes, you can see that a code that starts with a 2 is for income. So that one should be found in the statement of profit or loss, not in the statement of financial position. So therefore that's our answer there. I'm sure you can see how these questions can be tricky, but they are not that tricky. Okay, they are not that tricky. All right, we are given this question. Sales tax is about 15%. The sales tax rate is 15%. Gross sales are 690. What are the net sales and the sales tax? That's the question we have been given. Okay, gross sales. If we are being told that gross sales, it simply means that the sales figure there includes the sales tax component. Okay, the sales figure includes the sales tax component. So it is important to note that net amount. Okay, let me try to write it. Net amount. The net amount is equal to 100%. Oh, what's going on? Forgive my pen, please. Misbehaves. Okay, so the net amount is 100%. All right. So gross amount is 100% plus the percentage of the sales tax. Okay, the sales tax rate. All right, that's the gross amount. Gross. This pen of mine. All right, so gross is equal to 100% plus the sales tax. Okay, plus sales tax. All right, now why are we saying net amount is equal to 100%? This is because that's the amount we are entitled if we are charging. Okay, that's the amount that is going to be lawfully for the business. All right, it is a consideration the business is entitled to. The other amount is for the government, okay, or for the tax authority. All right, now in this situation now we are told that the sales tax rate is 15%. All right, so gross sales are 690, which means these gross sales, they include the sales tax. All right, there is 100% for the net amount and an extra for the government. All right, so how then do we have, or how can we determine the net amount? All right, how do we remove the 100% from this gross amount? All right, so we're going to say net sales, the net sales is equal to 100%, 100 over 115, because 115 has got 100% plus the 15%. All right, so the 115% there, that's the gross amount. All right, so the net amount, like I said, is the 100%, which is, for us to determine this net amount, we then have to say 100 over 115 multiplied by the amount in question, which is 690. Okay, and we are going to have 600. Okay, that's the net sales amount. All right, for us to get the the sales tax amount. We know that the sales tax is the sales tax rate. So we are going to say sales tax, the ST, is going to be 15%, because we know that that's the rate we have been told. Okay. Sorry. Sorry there. This is the rate we have been told. Okay. So we are going to say over 115. And we're going to say multiply by 690, and we should get our 90. We should get our 90. Okay, and we get back to the answer, and we should get that same figure. So you can see here that our answer should be this. Okay, you may try to confirm with your calculators to see if these figures are tallying. Okay, 15 over 115 multiplied by 690, that's a 90, correct. Okay, hope there we did it. Let's move on. Let me check, cross check. Yes, that's the green arrow here. I mean the green tick shows that we did it. Now for the sales tax question again. Sales tax rate is equal to 16%. Full net price before any bulk discount is equal to 3,000. Bulk discount is equal to 20%. Okay, let me try to squeeze to find out if we can squeeze these. Seems it can't be squeezed. I wanted to share the screen. All right. Can we try to squeeze so that also have a screen? Okay. I'm sure you're still seeing the questions. All right. The sales tax rate is equal to 16%. Full net price before any bulk discount is equal to 3,000. Bulk discount is equal to 20%. What are the gross sales and the sales tax? Here the rule is you just have to first deal with the discounts first. You have to deal with the discounts first before you treat for any sales tax. Okay, that's the rule. You need to first deal with the discounts first before you adjust for any sales tax. So let's do that. Okay, let me try to erase. Okay, it's not moving, doesn't matter. Let's try to use some board here. Okay, so we are told the full net price before any bulk discount was 3,000. Okay, and bulk discount is 20%. So what are the gross sales and the sales tax? All right, so that's the question for us to determine. All right, so we're going to say the bulk, I mean the net price before any bulk was all right, going on? The pen is not writing. Okay, that's the disadvantage of a blackboard. All right, net price for discount is equal to 3,000. Okay, now I said you have to adjust for the discount, so price after discount, price after discount is equal to 3,000 multiplied by 0.8. Okay, and we must get 2,400. Why have we said 0.8? Because we are not going to pay we are not going to sell the full 100%. Okay, because remember I said the net is 100%, so we are not going to get the 100% price, the sales amount. We're not going to get the full payment of 3,000, but we are only going to get 20% less. So 20%, 100 minus 20%, that's 80%. So we are only going to get 80% of the 3,000. That's 2,400. Okay, and since this one was a net amount, for us to get the gross now, the gross is equal to 2,400 multiplied by 1.16. All right, because we are told that the sales tax rate is 16%. All right, the sales tax rate is 16%. So for us to get the gross amount, that includes the 100% net and as well as the 16% sales tax, we then have to say 1.16. Okay, 1 stands for the 100%. Then 16 is the 16%. This is 100. That's 100. Let me try to illustrate this again further. We are simply talking of 100. Okay, 100%. 100%, ladies and gentlemen, is equal to 1. Okay, 100% simply means, or let me just say 100% is equal to 100 over 100. Okay, if somebody said you have obtained 100%, it simply means you have obtained all the marks. You have obtained 100 over 100. Okay, that's what it simply means. All right, so 100% is equal to 1. All right, 16% is equal to 16 over 100, which is equal to, if we say 100 into 16 is at 0.16. So this is why we say, if we now say 100% plus 16%, this is equal to 1 plus 0.16, which is equal to, because this is 0.16, I've shown you how we got the 1 and how we got the 0.16. So this is equal to 1.16. I'm sure you are not lost there. I'm sure we are still together. All right. So we get back here and we multiply our figure 2.4 multiplied by 1.16, and we must get some figure there as our gross. So that's 2.4 multiplied by 1.16, that's 2.784. That's the gross amount. And for you to get the sales tax amount, you know that the net amount was this one, was 2.4. The gross amount was this one. So obviously the sales tax should be the difference. Okay, the sales tax should be the difference. In this case, the sales tax should be 2.784 minus 2.4. This should be about 384. Okay, so let us see from our question if we have done it correct. If we didn't, then it means there was an error, and errors are common, ladies and gentlemen. Errors are common. Tell your neighbor, errors are common. Okay, so like I said here, the difference should be the sales tax, which I said should be 2.784 minus 2.4, which should be 384. So as you can see here, it can be seen that our answer there answer there should be this animal here. Okay, I'm sure we are together there. That's how we do it, ladies and gentlemen. And let me just try to find another question, a befitting question. All right, let me just try to look at a befitting question before we are tired. Okay, I'll try to find another question that's gonna assist us in our feedback. Okay, there is this question. In a period, a company charges 4,600 sales tax on its sales. Its purchases from its suppliers cost 6,000, including sales tax at 20%. What payment or receipts will be made to or received from the government at the end of the period? We know that when we buy goods from wholesalers, we pay what is called input tax, all right, because we want to resell those goods. So when we are making purchases, we paid what was called input tax, all right. But when customers come and buy those goods from us, we charge what is called output tax. Okay, we collect that tax on behalf of the government, which means the output tax should be remitted to the government, but the input tax should be refunded back to us. Okay, so the government has to refund us that tax. All right, that's the game. All right, that's how we do it. All right, when we buy goods from wholesalers, we are charged some tax. We call that tax input tax because it is part of the business inputs, the purchases. And then when we sell, okay, we are letting out the goods, we are selling out the goods. Okay, those are our outputs. So there is an output tax. All right, so the output tax is remitted to the government, but the input tax is refunded to us. Okay, so if the input tax on purchases is higher than the output tax on sales, it means that we are going to get a refund. But if the input tax is lower than the output tax, it means we are going to remit the difference to ZIMRA. Okay, so in this case, we are told that we had charged 4,600 on sales, of sales tax on our sales. So the 4,600 is our output tax we are given, no calculation. Then our purchases from our suppliers were costing 6,000, including sales tax. So that's a gross figure there. We are given a gross figure. All right. So let us determine the amount of input tax in that figure. How do we determine that? Okay, so let us try to do what we were doing. All right, and let us try to get some whiteboard. Okay, so we are told by the question that okay, this thing sometimes it freezes. Okay, I want those figures. Okay, so output uh, output text was 4,600. Input text, the input text, we are told um, the purchases, the gross amount was 6,000. Okay, but the gross amount includes the sales tax component. So let us determine the sales tax because we want to determine the input tax. So that's, we are told that the percentage was 20 over 120, and we must get our input tax. The amount should be 20 over 120. That's, if you just mentally, that's 1 here, 6 there, that's 1,000. So we're going to have 1,000. So we can get the difference there. That's 3,600 should be remitted to Zimra. That's because you can see that the output text is 4,600, the input is 1,000. So obviously we are going to remit the difference to Zimra because the output text is larger than the input text. All right, so we're going to remit 3,600. Let us see our answer then. Okay, this computer of mine, yes, there is it. Those are the solutions, these are the options. So you can see here that the best option is the last one. Okay, excuse me, my network is poor and the computer sometimes freezes. Okay, you can see there it's giving me those error messages. There's the issue of network. Okay, but you can see there that the 3,600 is there, as we have just determined. It's an issue of network, ladies and gentlemen. I wanted to find out. Okay, fine. That's the answer there. 3,600 should be paid to the government. All right, let me look for another question. The last one, I hope so, because my network is erratic and I can miss this paper anytime soon. Okay, we are having question here, question number 23. A suspense account shows a credit balance of $130. What could this be due to? All right, so if a suspense account is showing a credit balance, it simply means that the credit side of the trial balance did not balance. All right, here no computations are being required. You need not to show the examiners that you can work out with figures. You can work out properly with figures. Here you just have to show them that you are understanding the theory of errors. All right, so let us attack the question systematically. So let us review each option on its own. So omitting a sale of $130 from the receivable ledger. Now, do you think this can cause the trial balance not to balance, because a suspense account is only created when the trial balance fails to agree or fails to balance. So in this case, do you think the trial balance did not balance if we omit an entry in the receivables ledger? Okay, ladies and gentlemen, here we are being asked our knowledge. Okay, we are also being tested on our knowledge of books of original entry and double entry. Okay, we have to understand this. There was a diagram I sent you in the notes. All right, we have got what is called general these things. All right, let me try to get this. All right, we have got what is called general ledger. All right, the general ledger is where the double entry takes place. Okay, where we've got the debit and the credit. All right, whatever the trial balance is found in the general ledger. Okay, then we have got memoranda accounts. Memoranda accounts. These ones are, we've got receivables ledger. Receivables ledger. We also have got a purchases ledger. Purchases ledger or payables ledger or creditors ledger. Receivables is also called sales ledger. It's also called the debtors ledger. Okay, you know those ones. All right, they are also here. Then we have got books of original entry. Original entry. The sales day book, purchases day book, all those ones, the cash book, and so forth. All right, so this the general ledger, okay, takes this one. The general ledger takes totals from the books of original entry, whilst these memoranda accounts, they take entry by entry. They take entry by entry from the books of original entry. Okay, but these guys themselves, they do not have direct conduct. They do not, this, although they bear the name ledger, they do not know each other. All right, the receivables ledger is a record here, but in the general ledger we have got a receivables ledger control account. In the general ledger there is a receivables ledger control account, which means the receivables ledger control account should tally with the receivables ledger. Okay, what we are saying is, for example, if the receivables ledger control account is saying that we've got 1 million of receivables, it simply means in the receivables ledger, where we have got all information about every customer of the company, credit customer of the company, if we add all those credit customers, their amounts, they should come to 1 million. Okay, so the general ledger gives the total of all the credit customers or credit suppliers, but each record, the receivables ledger or the purchases ledger, should give us all information of each individual customer or supplier. All right, now the other point here is these memoranda accounts are not part of double entry. So if we omit anything to do, if we omit to write in any transaction in the memorandum account, it doesn't mean that our general ledger is not going to balance. Okay, the general ledger will still balance even if we ignore to update those memorandum accounts. They are only there to assist managers to quickly, handle queries between the business and its customers or suppliers. All right, but they are not part of the double entry bookkeeping system. Are we together? So if you know that, then this question is going to be easier for you. All right. Where's the question? Yes, the question there. You can see that option A, omitting a sale of $130 from the receivables ledger, is not going to be a problem. It's not going to lead to the creation of a suspense account, because a suspense account is only created when the trial balance fails to balance. So if we omit to endorse an entry in the receivables ledger, that is not going to create any suspense account. So that one is the wrong answer. It's not a reset. You ignore it. Then the second option there, recording a purchase of $130 twice in the purchases account. A purchases account is an account in the general ledger. So if we record an account twice, if we record a transaction twice, then we are going to have a double impact, okay, on the one side. So that one can actually lead to an imbalance. Okay, that can lead to an imbalance, okay, of the general ledger. But let us hold it there. Let us see other options. Failing to write off an irrecoverable debt of 130. This one is actually an issue of an accounting convention. All right, if you ignore to treat those irrecoverable debts, it doesn't mean that the trial balance is not going to balance. The trial balance is going to balance, okay, because you did not write down the debt which was supposed to have been written down, but that one does not in itself going to lead to an imbalance in the trial balance. So that one is a wrong answer straight away. Then recording an electricity bill paid of $65 by debiting the bank account and crediting the electricity account. Here, what has happened is we have transposed the the double entries. All right, we have actually debited, or in other words, we have reversed the transaction. All right. Let me try to illustrate this. The correct entry there, okay, the correct entry was supposed to be because we paid an electricity bill. Okay, we paid a bill, so we should have at least debited electricity and credit bank or cash. But we did it the other way around. We debited bank and credited electricity. All right. In this case, we have just made an error of reversal. All right. So in this case, the impact is going to be zero. There is going to be a zero impact. Okay, the trial balance will continue to balance, so there won't be any suspense account to worry about. So you can then say that our answer remains B, recording a purchase of 130 twice in the purchase account. That one is going to lead to a suspense account of 130 credit, because the other entry here, the second entry which we made, has no supporting debit, credit entry, right? Because remember, purchases are increased by debiting, so we only made another second debit entry without a corresponding credit. So this is why we are having a 1/3 credit on the suspense account. All right. There is this question: which of the following statements explain the term memorandum account? The answer, as we have already indicated, is the third option there. An account used to record information which does not form part of the double entry bookkeeping system. All right. Please note that. Do not be confused. Okay. We have got question number 30. Which of the following items will appear in the firm's cash book? All right. The cash book, ladies and gentlemen, is for the recording of cash only. All right. The recording of cash or bank transactions. So anything that affects the business cash flows is going to be recorded in the cash book. Now, for you to ask this question or a question like this, you need to attack or to review the options on an option by option basis. So let's start with the first option. Okay, I'm looking for a highlighter. Okay, better. Irrecoverable debts written off. Okay, irrecoverable debts written off. Do you think that can affect the cash book? Irrecoverable debts are those debts or debtors of the company or credit customers which have failed to come up with their payments. All right. So if we write them off, it doesn't mean that we have received anything. All right. We would not have received anything, but we have realized that to continue recognizing them as customers, it's no longer palatable. It's no longer sound. All right. It becomes a distortion. So we have to just strike them off from our receivables ledger. All right. So in that case, no cash has come to the business, so therefore we can't make an entry in the cash book. So that one is out. Then let's talk of this one: receipts from sale of surplus equipment. In this case, receipts are cash. Okay, that's cash received. So we have received the cash. So automatically this entry should appear in the firm's cash book. So that one, you can put it aside as a potential answer. Then credit notes. Credit notes are issued to customers if they have retained some goods. So they are there to reduce their amount. All right. So in this case, there is nothing. It's just an acknowledgement that they have retained goods to us which we had sold to them. So in this case, the credit note does not appear. Okay, will not appear in the cash book because no cash has been recorded. All right. Then sales invoices. The sales invoices. These ones are issued to credit customers. All right. So they're just they're actually a demand for payment. Okay, they are demanding payment from this customer. So this is why we give them invoices so that they pay in future. So you can also see that this one is not. So the answer there, that should be our answer. The option that should be our answer is the second option, as you can see there. All right, let me try to look for another question. All right, this question, okay, which of the following correctly records discount received? All right, I said discount received is income. Okay, it is income in the sense that the business is no longer going to pay a higher amount to the supplier. All right, they are only going to pay a reduced amount on their purchases. So the discount which they received is actually an income, and an income is by default a credit balance. All right, so to recognize an income, you open a credit entry. All right, so you're going to credit discounts received, right, and debit the supplier, because the supplier is remember, a supplier is a creditor, all right, or a liability. All right, so to reduce a liability, you debit it. Okay, to reduce a liability, you debit it. So when you see a supplier account, that's a credit. All right, that's a creditor. All right, so a creditor is a liability. So when you want to reduce a liability, you have to debit it. So this is why option 2 and 3 are the best. All right, so this is why we have ticked these two options, option number 2 and option number 3. You credit discount received and debit supplier accounts. Okay, and I said, to avoid confusion there, just know that supplier accounts are accounts for creditors, and creditors are liabilities. All right, so liabilities are by default increased by crediting. All right, you increase liabilities by crediting, but when you want to reduce them, in this case, if the suppliers give us a discount, they are reducing the amount. Okay, they are reducing the amount which we owe them. So in this case, we are debiting them because of that discount they have given us. They are reducing their amount, so we are debiting them, and at the same time increasing our income. So we are crediting the discount received. Okay, and sure, let me just try to look for the last one. Let me try to look for the last one. Okay, there is this question, and I hope this should be our last one. Tapua is preparing the general ledger journal entry to write off an irrecoverable debt. He knows that the debit entry should be made in the receivables expense account. In which general ledger account should the credit entry be made? Sales account, bank account, receivables account, receivables allowance account. You can just pause the video and try this question on your own. Okay, I hope you have tried on your own and you've obtained the correct answer. But let me try also to flow with you. Here, Tapio wants to prepare a general ledger journal entry, okay, to write off an irrecoverable debt. And he knows that the debt entry should be made in the receivables expense account. Remember, when we are striking off these debtors, it is an expense to the company, and an expense is increased by debiting. So this is why Tapio is making a debt entry in the receivables expense account. the principle of double entry states that an impact on the debit should also have a corresponding impact on the credit. So he has made the first side of the double entry by debiting the receivables expense account. What is the credit entry to be made? The first option is saying sales account. So if he credits the sales account, he is saying that he has made sales, because sales are by default increased by crediting. Okay, so when we say credit sales, it means that you have to recognize a sale. In this case, he is writing down the sales has already been have already been recognized, but they are now at a stage where we cannot get the money. Okay, we sold on credit, we made that entry some time ago, so we can't make another entry on the same transaction. That will be double accounting and will be worsening the error. Okay, so number one is out. The sales account is out. Now, must he credit the bank account? By crediting the bank account, we are saying he has to reduce the bank account. Is that possible? Here, it is an issue of a customer that is failing to pay us, so we just want to strike him off our record. So we can't reduce the bank account. That is impossible. So that one is out. Then receivables account. This one should be the potential answer. Why? Because we are saying we need to reduce the receivables account, or we want to reduce the customer's account by the amount that is irrecoverable. So obviously we have to reduce the account by crediting the receivables. Remember, receivables are by default debits because they are assets. So if you want to reduce them, we have to credit them. Please remember the PL's acronym. All right, remember the PL's. Let me try to have the PL's. The PL's acronym. Okay. That's the PL's acronym I'm talking about. So the P is for purchases, E expenses, A assets. These ones are increased by debiting. This pen of mine is jealousy. Okay, they are increased by debiting. Okay, we increase them by debiting. Now we've got these other ones. The R is for revenue, okay, revenue or sales. The L is for liabilities, okay, liabilities. The S, we really don't use it at this stage, but it's for share capital, share premium, and so forth. Okay, so these ones, revenue, income, liabilities, they are increased by crediting. Okay, we increase them by crediting, CR. All right, so either we are increasing them, or if they remain as they are, if we do not do anything with them, they are always going to result in a credit balance. Okay, because by default, if they exist in our business, they are going to be having a credit balance. If we are talking of revenue, liabilities, income, all those things, the capital, they are going to be reported with a credit balance. But if you are talking of purchases, expenses, assets, those ones, if they are in our business, they are being debits. They have got a debit balance. Or if we increase purchases or expenses, we debit. We create a debit entry. But the opposite is true when you want to reduce them. If you want to reduce the purchases, expenses, or assets, we then have to credit them. So if we want to reduce them, we credit them. Similarly here, if you want to reduce these guys on the credit side, we have to debit them. Okay, we debit. That's the rule. That's the game. Okay, I'm sorry. My pen here is not too well configured. All right, it takes time resetting because of the network. This is the last part, ladies and gentlemen. I do not want to spoil your day. Okay, so we are simply saying that when you want to reduce the credit, you have to debit it, and when you want to reduce the debit, you have to credit it. So simple mathematics. So in this case, you can see that the entry that is to be made should be made in the receivables account, because the receivables account is an asset account. We want to reduce this asset amount by a corresponding irrecoverable debt amount, so we have to reduce the receivables account. So the answer should be that one. Okay, that's the idea. It's a judgment. If you still have other questions in this test which you feel I should have explained, then I'll attend to you on a 1 versus 1 basis. So far, I've done it for everyone who has participated in this mock test. In our next mock, we'll be doing some of the questions to test your understanding, but at the same time, we'll be giving you new material so that you enhance your learning. Okay, until next time, ladies and gentlemen, may you continue to feel very excited. I mean, very, very excited. I am signing out.